environment. However, Singapore took the initiative to leverage capital markets and ensure that they can enhance development within their economy through capital markets. And what did this do for them? So they opened up their economy to patient long-term capital to drive an industrial revolution built on the backbone of a very solid financial system. Not too far away from us, we have examples of South Africa through the Johannesburg Stock Exchange. Its massive industrialization and real estate development was led mainly on the backbone of its deep and liquid capital markets. The Johannesburg Stock Exchange boasts as the largest capital market within Africa. And what does this translate to? It's quite evident when we look at the South African economy and see how much progress they have made. And when you look at what their capital markets has contributed towards that economic development by the size of their JSE alone, it illustrates the importance the capital markets have played when it comes to economic development. So now, Singapore and South Africa might seem like examples that don't meet our scenario as Zambia. Well, let's look at Chile. Chile, like Zambia, is considered one of the world's largest copper producers, probably in the top 3 bracket, with Zambia in that conversation. However, Chile's mining sector was predominantly, to some degree, owned by the majority of the Chileans. Why is that? Because of the pensionary reform that they had undergone, which mandated pension funds to invest significantly within the mining sector. And what did this mean? It meant the owners of the mines were the pensioners. Who were the pensioners? The very people working the mundane jobs day in, day out. They owned a stake within these mines. So that reduced the dependence of foreign capital when it comes to expenditure projects and enhancing the development goals within Chile. So now,
we can't seem to hear. And we just pause for a little bit. We try and how we get it back. Can you hear him? Please just show hands. Just raise your hand to show you can hear him or put the message in the chat.
Of capital market. Basically, the whole is realizing that it's resource mobilization. It's resource mobilization. So in our context, we just came off. So in our context, the back came off of the very rigorous, restructuring process. And as a result of that, government was constrained when it comes to social development. So we were basically trying to rebalance our economy in a trajectory that from where we are now, we can easily project growth. So now, how do capital markets come in and act as a catalyst, more of a catapult to push economic development forward? Well, by pooling these resources, firstly domestically, and then foreign resources get pulled in through the capital market. This will then allow government to expand its developmental projects both socially and economically in a way that trickles down to every citizen without the government feeling the burdensome need to service high debt. So capital markets are important for funding infrastructure projects. We had a little bit of a challenge. I was talking about how Indonesia has developed its rail and infrastructure. Indonesia deliberately came up through their capital markets master plan 3 with a policy where they mandate all infrastructure projects should be derived through a PPP arrangement, and in doing that, they tie it with a capital market framework. So that means or developmental projects. For instance, they developed over 180 kilometers of rail, that is both commercial rail and transit rail within their cities through their capital markets. And what does this mean? Who owns that rail? Well, owners of the rail are the very people who participated in raising that capital, and it was the citizens themselves. So they put resources, and the resources were channeled through, of course, their various intermediaries. Of course, those intermediaries are regulated by their regulator, which we will talk about when it comes to the role of the Securities and Exchange Commission to ensure that these funds are well utilized. Indonesia experienced rapid growth when it comes to rail export and import because they have utilized capital markets. So capital markets play a significant role when it comes to infrastructure projects. Like we intend to undergo massive infrastructure improvements and developments. Capital markets play a significant role when it comes to infrastructure development. Capital markets also contribute through foreign direct investments. How is this done? I think we are all aware that of the recent Bank of Zambia government bond auctions. The bank was looking for about 4 billion, and it was oversubscribed to the tune of 10. What does that say? Since its increase on the cap from foreign participation on the bond market from 5% to 3%, there was a significant jump. What does that illustrate? It illustrates that the government bond market, basically our capital markets in general, is demonstrating high levels of investor confidence. What does this mean? It means people are willing to bring their money, their savings into Zambia, following the backbone of a very strong debt restructuring process and fiscal prudence that has been exhibited by the Ministry of Finance and National Planning. So it has inspired confidence within the market, and people are willing to channel their funds both domestically and from the foreign perspective into Zambia. So now, capital markets as well contribute to priority sectors. I think as mentioned before, this can now be broken down further through SMEs when it comes to raising funds. For those of us aware, we recently had our first listing in quite some time on the Lusaka Securities and Exchange alternate market for .com Zambia. At its initial IPO listing, probably shares were around, if I'm not mistaken, 12 kwacha or so, and now they have seen a jump over 100%. What does that mean? It means small businesses can as well get into the market and raise capital. So now, if we also look at the IPO registered oversubscription of over 115%. That's significant. That tells a significant story. People are interested to invest in Zambian entities. They're interested to own Zambian. So small businesses that seek financing can actually raise finances through the capital markets. It's also possible for entities that are interested in green projects. Green projects could be projects within which have been identified within what we now call our green taxonomy. So this is a document that was developed to highlight what projects can be classified as green. One example can be given of the Copper Belt energy renewables, which issued a bond about 200 million. We'll discuss what that bond's application was, and how beneficial it was to the capital markets, to CEC themselves, and the Zambian economy at large. So now, just a little comparison that we would like to draw between your traditional expansion models and the capital market expansion model. The traditional funding model on your left hand side highlight some of the disadvantages one would get with opting for growth with your traditional debt methods. So these have quite the strain on the business. They are high interest payments attracted when it comes to your traditional borrowings, and the consumer revenue is quite low, and it crowds out capital expenditure. So a business has very little room to expand its operations because it first has to meet its obligations to servicing whatever debt it got. It also has risk of foreign exchange instability. Fluctuating exchange rate can be quite deteriorating to businesses that have borrowed, say for instance, from outside the country as opposed to through the capital markets. Now we can also look at some of the pros that come with a capital market-led economy. Well, risk sharing is probably the most important because a capital market approach allows for businesses and an economy to spread the risk. It's not concentrated in one source. So for instance, development is not strained on the treasury. Development will be now looked at from a broader perspective. A lot of people will get to participate in economic development, and we share the risk as well with government. So what does this mean? It means each and every one of us can hold to task companies within that we have invested to ensure that they are providing efficient services and quality services. So then now we are sharing the risk and reducing the burden on the treasury when it comes to funding economic treasury. When it comes to funding, this can also be growth. This can also allow the government. This can also allow reduce its dependence on copper prices. So if copper prices go up, mines within the mining sector. If copper prices go down, apologies on that. If copper prices go down, and mines within the mining sector are hit. That funded their expansion on debt. They would still be required to meet their debt service regardless of what the current prices are. But if they expanded via equity, they will not face the same pressure one mine is experiencing that was funded via debt, because their funding via equity allows them now to pay out dividends to their shareholders based on the current market conditions. Capital market-led growth also allows for wealth retention. This being the listing on the LUCE allows for more people to participate within the capital markets and a retention of resources within the economy. So it prevents flight risk of capital. So that means you don't have your funds being taken to Canada, to Switzerland. All the funds generated remain within the economy. Why? Because the majority shareholders are Zambian citizens. So as dividends are paid, they are paid to the very people that are within the economy that own those minerals that are being mined. And lastly, capital market-led growth enhances transparency. So public listing requirements reduce the tendency of price transfer, and this allows for an enhanced taxpayer base and efficient operations of the company. So with that backdrop of what capital markets are and how they can improve an economy, has the Zambian government done anything to ensure that our capital markets are conducive enough to ensure economic growth? Well, the Zambian government, of course, is committed to achieving Vision 2030, which aims, like spoken before, to transform the country into a prosperous middle-income country. Now, recognizing the significant finance demands of this goal, particularly in sectors like energy, agriculture, tourism, and mining, the government acknowledges the current financing structures are insufficient. So those are the reasons we had to go our debt restructuring. It's because the government realized the current funding structures for these various projects might not be ideal for proper economic growth. So what has government done in that case? So to address this, it identified capital markets as a critical enabler for long-term sustainable economic growth. To strengthen the markets, the Ministry of Finance and National Planning, in collaboration with the Securities and Exchange Commission, developed a capital markets master plan. So the capital markets master plan is a 10-year strategy designed to build efficient, transparent, and trusted capital markets that can provide medium to long-term financing to support Zambia's broader development agenda. So now our capital markets master plan, while it was being developed, identified key areas that would be a bedrock of ensuring we have a robust and sound capital markets. And they were coined as development areas. So what development areas are currently were identified for improvement, and how do they address economic growth? So the first development area that is within our capital markets master plan is enhancing the government bond market. So now, why are we enhancing the government bond market? Well, the focus on primary market issuance, transparency, and developing a liquid secondary market. What does this do? So as we enhance our capital markets, especially our government bond market, it provides a more transparent environment where, if participating at the primary market, this is the IPO, there's a transparent pricing of shares or of pricing of bonds for each and everyone to participate. The second pillar, development area, is enhancing other traditional markets. What are other traditional markets? Well, this could be your collective investment schemes and any other innovations that don't fall under your government bond market. So the view is to strengthen the equity and corporate bond market to support the private sector growth. Of course, every robust economy has a very strong private sector. So this is one of the views that we have within the capital markets, that a strong private sector is a good indicator to a strong economy. So we feel through the capital markets master plan, it is important to develop our private sector by enhancing other traditional markets. Thirdly, we have the development of new and innovative products. So this is quite critical to the Securities and Exchange Commission and the Ministry of Finance. I think we'll address its importance to the Securities and Exchange Commission because it ties quite critically to one of the 6 mandates, which I will share just a few minutes from now. So under Development Area 3, the CMMP seeks to introduce green bonds onto the market, exchange traded funds, and real estate investment trusts. I think for some of us that could have some market knowledge, we are aware of the green bonds on the market. We're also aware of the real estate investments that are available on the market. The fourth development area is enhancing capacity building across capital markets. Of course, it is very important to have capacity within the capital markets. It is only with a knowledgeable population that people will be able to invest in the right capital market products and avoid capital market products that are basically tailored to scam people. They're not even capital market products, they're just scammers. So enhanced capacity within about capital market products is one of the pillars that is quite critical to ensuring the success of our capital markets. Lastly, but not the least, is enhancing the capital markets environment. So the capital market environment is one that is quite delicate. And of course, to ensure that it is well protected and investor funds are well utilized, we believe that it is essential to enhance the capital market environment by constantly reviewing the regulation that is within the capital markets and ensuring that we provide enough surveillance to protect citizens from fraudulent capital market instruments. So just to give a quick glance on how far we have come with implementation of the Capital Markets Master Plan. So the Capital Markets Master Plan was developed in 2022, launched in 2023, and implementation of the capital markets started in mid-2024. Since then, one of our goals is to attain a Morgan Stanley Capital International country rating of being classified as a frontier market. We hope by 2027, we would have made progress towards attaining this classification. Another one key indicator towards achieving our CMMP goals is our market capitalization to GDP ratio. So at our starting point in 2022, our market cap to GDP ratio was 16%. We have since then seen significant progress being made towards our long-term goal of 33%. Well, funny enough, we have outperformed our long-term goal, which won't mean we will stop pushing towards having a market cap that is significantly larger than our GDP. However, as of now, we stand at 58.63%, which is slightly above our medium-term goal of 30%. We hope to achieve 100% or more by the time we are concluding with the implementation of our first Capital Markets Master Plan. Our third indicator is number of listed firms. At the starting point, we had 23 listed firms. Currently, we have 21 listed firms. This is something that we can work on together as an economy to ensure we have an increased number of firms that are listing. Just recently, .com listed. I mentioned it before. .com listed on the exchange, and we've seen significant growth in its share price. What does that mean? It means Zambians are willing and interested to invest in wholly Zambian-owned entities and ensure that all the wealth that is generated within the economy is retained within the economy. Our fourth indicator to track progress of our Capital Markets Master Plan is the implied market cap. At our baseline, we have a starting point of 4 billion, and currently we are at 9 billion. Our short-term target was 9.5, and our mid-term target is 13.9 billion. We're slightly short of our short-term target. However, interventions have been put in place to achieve this medium-term target. Our fifth indicator is the domestic share turnover ratio. Well, this just simply illustrates how frequently shares are traded on our exchange. So now we spoke about how we have this newly developed confidence in our markets. Well, we now need to improve the rate of people participating within the capital markets. As spoken before, capital markets are a way of ensuring entities that are operating within Zambia are owned by Zambians. So everyone would do themselves a good justice to find a way of participating within the capital markets. And this is public information. I think if one is interested to know how this can be done, you could simply visit the Securities and Exchange website. There's a guide and on how one can participate within the capital markets. So looking at time, I will just quickly run through just so we are all together on how far we have come. Then we have a development pipeline. We hoped to have by midterm, which is next year, 8. Currently, we have 1. So if there's, again, members within our audience that are looking to issue on the market, they would do well to ensure that they get their products on the exchange. We have our green bond, as spoken before, one of our development areas. That's development area 3, development new and innovative products. So through the capital markets, we developed the green bond guidelines. So now these green bond guidelines are what allowed some entity to issue a green bond. And this green bond raised, for starters, was oversubscribed at its first tranche by over 100%. And its second tranche, oversubscribed by over 200%. So it sends out a message that people are aware of what investment opportunities are there in Zambia and are readily available to invest. So now the onus is up to us to as well join the bandwagon and invest and ensure that we have a way of securing the future of not only our country, but ensuring that wealth is equitably distributed amongst us citizens. So our green bond currently beats our target of 100 million. It stands at 150 plus. We hope we could, by the end of this program, outweigh our target and issue over 1 billion worth in green bonds. We have assets under management fall slightly short of our midterm target. They're at 163 with a target of 170 million. And we are yet to issue our first exchange traded fund. And we have issued our first REITs, and its value also outweighs our long-term target. So for starters, we were hoping to issue our first REIT by 2027. Not only did we issue one, we smashed the target. So smashing a target does not necessarily mean we stop there. Targets are meant to be achieved, relooked at, and re-implemented. So we hope we can achieve even greater green bond REIT issuances and developmental projects by the time we are approaching our target. So now just a quick look at a case study on how capital markets have led to economic growth. So we'll have a quick look at CEC Renewables 200 million green bond and what impact it had on the economy. Well, CEC issued a green bond worth 200 million for the expansion of a solar project. And what did this do towards the economy through the capital markets? Well, for starters, it provided the company with long-term finance that was technically cheaper than your traditional funding models. And it allows the company to have fiscal room to not focus its revenue on debt repayments, but expansion of operations. And what does this do? Expansion of operations means you are creating more employment to develop a plant. So that 200 million that CEC raised went towards the implementation of its solar plants. And these solar plants saw the generation of over 1,900 jobs during construction and over 80 plus permanent jobs for the operation of this plant. So this is an example of how, through the capital markets, CEC was able to pump in uh, an additional 100 megawatts of electricity into the grid. So now this was channeled towards the mining sector, but it would be, it's only right for us to critically assess how these funds trickle down to the rest of the economy. So now if CEC is pumping in 100 megawatts towards the mining sector through ZESCO, does this directly relates to ZESCO now being able to channel that energy that it was providing to the mines, to citizens, and it allows for a certain portion of the citizens now to be able to benefit from the additional electricity generated by CEC being transferred to the mines and offsets now to the citizens. Another case study that can be looked at is Mopani copper mines. So now, Mopani copper mines, which majority of us know, was owned by Glencore, and it had a legacy debt of about $1.5 billion. So now, what did this mean? Its operations were basically driven to service its debt. So now, through the capital markets, International Resource Holdings bought an equity share, bought Glencore out. So that means they bought what Glencore owned via equity and not debt. What did this mean? They pumped in money into the mine that allowed the mine to expand in its production. And through this expansion in production, it meant jobs were created, and whatever revenue the mine generates is not directed solely towards debt repayments. Now, that revenue, because it came through a capital markets equity purchase, allows the mine to expand continuously within its operations, but via human capital employment, as well as paying off its local suppliers, increasing the productivity the mine could achieve, as well as boosting the local economy by providing the much needed payments that were needed to suppliers whose businesses were halted because of Glencore's inability to clear that legacy debt. So now this means the mine will operate more efficiently because it has very reduced debt obligations and more equity obligations. So looking at all that capital market conversations, how funds flow from one place to another, and how it's impacting the economy, does the capital markets go unwatched? The answer is no. So this is where the Securities and Exchange Commission come in. So now, what is the role of the Securities and Exchange Commission? Well, for starters, the Securities and Exchange Commission is established by the Securities Act Cap number 358 of 1993, which was repealed and continued by the Securities Act number 41 of 2026 and later amended to Act number 21 of 2022. So the Securities and Exchange Commission has two mandates, very critical. One is investor protection. Who's the investor being protected? Of course, yourself. And two, market development. Market development is quite critical to the role of the Securities and Exchange Commission. I think, as alluded to much earlier, CEC were able to raise 200 million via a green bond. Well, prior to the Securities and Exchange Commission's intervention, were no green bond guidelines. So the Securities and Exchange Commission deliberately took a step to introduce guidelines that would allow for entities that wish to raise funds for green projects to have a guideline on how they could go about this and how those funds would then be ring-fenced. So the Securities and Exchange Commission ensured that we have these green bond guidelines. Not only green bond guidelines, the Commission also developed what we call the Real Estate Investment Trust Guidelines. So these clearly outline how an entity that wishes to participate in the capital markets through a REITs would be guided on how funds will be raised and what rules they would play by to ensure that investors are protected. So basically, the Securities and Exchange Commission is more like the police of the capital markets, and it helps the capital markets um, grow in a way that protects investors. It protects the entities that investors are investing in, and it ensures that there's transparency from the investor to the investment vehicle, as well as the government's needs and aspirations are protected. So it's more or less what one would call the police officer of the capital markets. And we all know that any environment without a police officer is one that is prone to cheating and fraudulent behavior, or in ensuring the capital markets are well regulated and protected. Looking at the time, I think we'll skip to our Q&A and hope that this session was informative, and would like to hear some feedback from each and everyone. Thank you.
Thank you. Very elaborate presentation. I hope our audience have and one or two things. We're going to your Q&A. So if you so while we're waiting for, okay, we have the hand. I was just about to ask us a question on my own. Okay, we have Bedon Upinda. I hope I pronounced your name correctly. Would you unmute your mic and ask your question?
Share. Is a no.
Sorry, Bedon, I'd like you to just ask the question again. We could not get it. Please start.
I was saying.
Okay, I think I have an idea of what your question was structured like, and you basically want to know on whether this information has been disseminated to the youths and various age groups within the economy. Well, yes, that's the short answer. So basically what we do on monthly basis is through sessions like these, which the town hall is meant to reach out to individuals that might not know of what investment opportunities could be there and what the investment climate is like in the country. So the Capital Markets Master Plan was developed as a whole document and as well as a citizens version. So we have copies of the Capital Markets Master Plan situated around various points within the various districts. We also have it available on our Securities and Exchange Commission website. It's readily available, and it's been broken down in a way that every person that wants to read through would be able to understand. To go a step further, we also conduct monthly awareness programs to ensure that citizens are aware of what policy is currently being implemented to ensure that citizens are looked out for first. So yes, we do have the Capital Markets Master Plan available for students, and it is available for you to access on the Securities and Exchange Commission website. I think we'll be able to share with you at the end of this presentation a link to access the Capital Markets Master Plan for you to read through, and then you will be able to as well understand in more detail what is outlined within the CMMP and where you yourself can fall in and fit in as an able investor within the country. I hope that answers your question.
Thank you, Tim. And you also have the in most provincials around the country, we do our taxation in the provincial district and give copies there for the public to pick up some copies. So anyway, provincial administration officers will be able to find copies of the CMMP. And also in the spirit of going green, we have a copy on the website. It has just been posted in the chat, so you can download a copy, same version, which is the same version of the document. We have another question from Douglas in the chamber. He wants to know more about the green bond. What can you explain about the green bond? Douglas, maybe you can just offer a bit more time to what you want to know. Because that the presentation did cover when it was auctioned and what the auction amount was and what amount was raised. So I don't know what those would like to know. Maybe they just clarify so that we can start going from that angle.
Okay, so maybe as Douglas is restructuring his question, just to add a little bit more insight on a green bond. So a green bond is a type of instrument that is issued for projects that are nature related. So they are climate friendly projects that reduce the carbon footprint of production within an economy. So for instance, CEEC raised 200 million for a solar plant. So now, upon them issuing that green bond, it registered an oversubscription on both trenches of about 300% put together. It means the appetite to invest in sustainable projects is very high within the country. So should going forward, entities can look to expand their production in a more sustainable manner. And to achieve this sustainability linked project, there is a mechanism called a green bond. So the guidelines outline what an entity needs to do to be able to access these green funds. And it also goes a step further. Through the Green Finance Mainstreaming Working Group, a taxonomy was developed. So now the taxonomy outlines what can be classified as a green project. So to prevent what we would call greenwashing, where any green funds, to prevent that, deliberately a taxonomy was developed to identify within our Zambian context, what is it we would classify as a green project? So that's basically, in a nutshell, what our green bond is, the green bond guidelines, and the taxonomy. So these, the green bond is tailored to those particular two documents which outline the areas of operation within the green space.
Thank you so much for that. So Douglas have added to his question. What he wants to know is how can an ordinary Zambian invest in the green bond? How can he invest? So personal level.
Okay, so the first step is your exchange. That's the Lusaka Securities and Exchange. So via their My Luce app, you'll be able to access what investment opportunities are there. And it's quite important to always keep your eye out on who's issuing a green bond, what bonds are available to be bought. And there's a common misconception that you can only buy government bonds from the Bank of Zambia website. Well, there's a step you can take further. Government bonds are not only traded on the primary market. So as the government's fiscal agent, Bank of Zambia issues on the primary market. But government bonds are not only traded there. Government bonds are readily available on what we call the secondary market. And it is on this secondary market where one can participate in buying government bonds, either it be a green bond, a corporate bond, or your traditional vanilla bonds. One would participate in buying these government bonds via the secondary market through the Lusaka Securities and Exchange Commission or through your preferred bank.
Okay, thank you, Super. So ladies and gentlemen, thank you so much for your active participation in today's Townhall, and thank you, Super, for the wonderful presentation. We have exhausted our hour, and we do not have any more questions in the chat, so we will be ending our Townhall here. Just to thank the audience for joining us and for making time. Please spread the word on how you can invest in capital markets. Also, you can share the link or the link to as many people as possible so that we have more people listening to how capital markets work and how you can participate in capital markets. The presentation will be shared, and the links to the documents mentioned in the presentation, such as the CMMP, have been posted in the chat. We've also posted the link to my app, the Luce app, so that you can explore it as well and see how best you can participate in capital markets. From us here at the Securities and Exchange Commission, our presenter, Osiko, and everyone in the background, our IT, Sichoni Chanda. Thank you so much, everybody, and have a good day.
Thank you.